Okay, thank you everyone. Appreciate your time joining for this Broken Hill Mines March quarterly conference call. We've still got people coming into the waiting room or into the main area here, but we'll kick things off anyway. Try and keep this to about 20 to 25 minutes, and give you an update on the good things that have been happening at Broken Hill. Just push forward on the screen. This gives you a snapshot. This slide will give you a snapshot of the March quarterly performance, and really, March for the team has been one of delivering on what we said we'd do. We are now in a process of bringing on three ore feeds. So we originally started with one relatively low-grade ore feed at Western Min, and we're progressively bringing on two more ore bodies, materially higher in grade. We had double-digit growth across all of the sort of key metrics in the December quarter, and the team's achieved that again. Really, really exciting to see. And we're starting to see the translation of that into benefits of material metal growth and ultimately flowing through to sales and cash flow as well there. So I'll take you through this snapshot. There's further details available in the body of the quarterly report as well. You can see it in terms of our ore processed, about 115,000 tonnes of ore processed. We are limited to about a 500,000 tonne per annum run rate on ore processed there at the moment. But as we get the tailings dewatering facility online at the end of this year, we'll be able to bump that straight up to 750,000 tonne per annum run rate. And so we're butting up against more or less against that 500,000 tonne run rate. You'll probably see us into the June quarter be more about 125,000 tonnes of ore processed there as well. And really importantly, our overall ore grade is continuing to increase there. So you can see the steady increase that we've had over the last three quarters. We do report that in zinc equivalent basis there. That is technically the correct way to report because zinc is still our major revenue source. However, we're getting big influences coming in from silver and to a degree lead in terms of that zinc equivalent calculation as well, which is really, really exciting to see. We do see the business evolving to being a silver dominant producer. And at that stage, we'll really be able to ramp up the silver equivalent discussions and presenting various production financials in that way. And you can see in terms of the metal production metrics, so these are not concentrate production, the metal production metrics below silver, lead, and zinc, all of them up, and all of them up quite, excuse me, quite substantially. And we fully expect this sort of growth to continue. We really haven't started in a material way mining our high grade ore bodies. I believe our main load supply for the quarter of March was certainly less than 10% from a stoping ore perspective. The really good quality main load stoping ore was well less than 10% of our overall feed. And we now have 5 levels online there in Blackwood South on the main load ore body. I'll take you through that at the back end of this presentation. We're going to be seeing that material ramp up in that main load feed as an overall percentage to the plant. So it'll be offsetting some of the lower grade Western Min feed initially until we have our tailings dewatering plant on, and then we can expand further. But as we increase that percentage of main load, and we'll talk about Pinnacle shortly, you're going to see those grades bump up and silver production bump up. And I guess to give you a snapshot of what the future looks like, it was quite incredible to see the back end of our March quarter. We were feeding main load ore in, and I believe from memory the feed of silver was around 60 or 70 grams a tonne only. It's still not particularly high, but significantly higher than the rest of the quarter there. And for the final 3 days of the March quarter, we produced 10% of the entire silver production for the quarter. Just by that, it was a relatively modest increase in silver grade. 60 or 70 grams a tonne is not really where we see our silver in a long term, but we had a huge increase in that silver production. So it was a little snapshot into what the future looks like, and we're starting to see that again into the June quarter as well as we go through runs of main load stopes as well. So that's exciting to see from a production perspective. And so let's keep that step ladder going of double-digit growth in those metal production bases. From a cost perspective as well, the team has really implemented some great cost discipline. As we said, our operating costs are actually 6% lower quarter on quarter, despite the metal production increase. So from about 20 million down to about 19 million there. It's excellent to see. Corporate costs have been flat for an extended period of time. That will continue. And importantly, you'll see we note there 28% reduction in our growth capital expenditure. Now that is as scheduled. There's nothing surprising about that. And this is part of us getting through the main, we're more than halfway through that sort of execution phase of our ramp up plan. So taking the plant from 500,000 ton capacity to 750,000 ton per annum capacity, bringing on these additional ore bodies, so the underground development that's required and the open pit development at Pinnacles. We're getting well through that program. So significantly dropped our quarterly growth capital down to about 10 million. And that's also in line with us transitioning to being owner operator as well. So we've previously, up until the end of January, we had Burn Cut in doing all of our underground mining development. Did a fantastic job for us. It was a strategic initiative by the business to bring Burn Cut in. This was as we're a private company evolving and becoming a public company just in July last year. But we utilised the Burn Cut team to be able to bring main load online quicker. More costly, obviously, to bring in contractors, but enabled us to sort of sprint towards our strategy of bringing these higher grade ore bodies online. The team on site now has taken over that operation as well, doing a great job there. And ultimately, it's been part of our lowering of our costs as well. So excellent to see, and we'll see that development ramp up under our own stewardship there. The business continued to generate positive operational cash flow. It's up 45%. It's obviously a small number, 2.4 million. But again, we expect to be seeing that grow significantly over the coming quarters, and also transition from what we call operational cash flow into free cash flow. So as our growth capital continues to drop down and our operational cash flow continues to ramp up, we expect to be able to generating free cash flow sometime through this calendar year. Obviously, dependent on where metal prices are. Metal prices, I should say, are really quite good right now. Actually, just into the June quarter, they've increased significantly. We've got zinc is a fantastic price, about $1.55 a pound at the moment. Silver, despite the perceived doom and gloom about it, is trading at $75 an ounce. It's probably 2.5-3 times what it was trading at when we acquired the assets in 2023. And lead is fairly dependable. It simply sort of doesn't move at around that 90 cent a pound mark as well. So really good price environment at the moment. And from a treatment charge perspective, it's still quite excellent. So you're seeing negative TCs in both zinc and lead concentrate treatment at the moment. So a function of extensive supply has come online. Sorry, extensive processing capability has come online for zinc and lead concentrates. And really, there hasn't been a rebound in supply. So despite the high prices, global mine production, in terms of concentrate production, really hasn't responded in a material way there. And so we're seeing the benefits of that at the moment. Really good prices and quite low TC. So great time to be ramping up a silver lead zinc operation as well. And that's what we'll be doing throughout the rest of this calendar year. We've got a really good cash position for that. Total liquidity of $75 million. As I said, you put that against positive operational cash flow and $10 million a quarter in growth capital expenditure, which is reducing. We're in quite a strong position there to utilise what we have in terms of cash, undrawn debt as well, to execute this ramp up plan and continue to grow this business into free cash flow generation. So that's a really brief snapshot of the March quarter to date. I think the team has done an excellent job in delivering on what we said we're going to do, and we fully expect to do the same thing again next quarter. Is be able to deliver into that double-digit growth, metal production up, see those grades come up, and continue to drive the financial results of the business as well. Obviously, depending on where metal prices are, we are completely unhedged in terms of our silver, lead, and zinc production. We're not opposed to hedging, but at this stage, we're not looking to hedge any of our material at all. We believe we can create value for shareholders via increasing production rather than financial engineering. That's shareholders can manage that part of their investment portfolio themselves for now. So that's the March quarter in a snapshot. Lots more detail in the body of the quarterly report itself. I'll now just give investors, I guess, more of an overview of the business and the plans going forward, just to refresh everyone about what we're doing. I'll do that over the next sort of 15 minutes or so. But I appreciate if people need to drop off, that's the quarterly snapshot that's been put in place. So, as we said, we have three ore bodies at our disposal or under our control. Two of those ore bodies are on the RAS mining lease, and one of them is at the Pinnacles mine there itself. Previously, before we took ownership, only the Western Min ore body was in operation, a zinc dominant ore body, silver grade, relatively mediocre at about 38 grams a tonne. But we invested heavily, and in October last year, we just started. The first sort of tonne of main lode development ore came out, and we're slowly ramping that up, that ore feed up over these preceding quarters in this calendar year. But you can see the material bump in silver there as well. So it's a much higher value ore body in terms of the grades of or the metal content of silver, lead, and zinc. But we're seeing a much, in terms of the value proposition, much higher silver grade, about 150 grams a tonne in that ore body. We will also be bringing the Pinnacles mine online this quarter as well, as we've flagged previously to the market, looking to start that process. Obviously, it'll initially be small scale feed and then building up over time, and particularly in line with our ramp up to 750,000 tonnes. At the moment, if we brought Pinnacles online yesterday, it would be displacing feed from Western Min because we're effectively at that full 500,000 tonne per annum run rate. But again, as we get towards the end of this year, we'll be able to ramp that up to 750 and really utilise main lode and Pinnacles ore while also maintaining our feed base from the Western Min ore body there. But a great leverage to have, and importantly, we are selling silver today. $75 an ounce is a fantastic silver price. I hope it goes to 200. Who knows what can happen with inflation and wars and all that sort of thing. It's certainly good for precious metals. Obviously, the silver very much linked to the gold price in that sort of inflation hedge, has significant industrial uses as well. But we're enjoying the good prices at the moment, and we certainly hope they go up. A quick snapshot of the company as it stands right now. We're only 9 months old. The business has really started quite quickly and strongly, and now we're setting that base up to grow for the future. So we listed in July last year, as you might recall, at a 35-cent price, raising $20 million there as well. We're very fortunate to have investors who backed us to raise money at $1 12 weeks later. So we raised $38.5 million at $1 in October last year, and subsequently rose above that, and we're now back at about 75 cents there as well. So we've got work to do to continue to reward all investors for their commitment and their patience for us as well. And that's exactly what we plan to do. Get the share price back, getting strong momentum again. A lot of that has to do with obviously macroeconomic climate, but we have the funding that we need. We're able to deliver into these growth projects now that'll continue to see this increased metal production, which will ultimately translate into increased sales and cash flow as well. But still, young entity, quite cheap in terms of that valuation there, in terms of our growth and our opportunities going forward. To give you an overview of the strategy of the business, or refresh on the strategy of the business, we are centered around the Broken Hill ore body, the famous line of lode and the extensions of that. It is, without question, the single largest and richest silver, lead, zinc ore body in the world. It is not even close in terms of other major ore bodies around there. Continuously mined for 140 years, 300 million tonnes at 15% zinc and lead, 300 grams a tonne of silver. 1 billion ounces of silver have been produced and 50 million tonnes of zinc and lead metal. And I guess some perspective there is that the world consumes currently about 12 million tonnes of zinc metal per year. So, this has been a major global supply of zinc and lead and silver as well over the journey, but it still has a vast amount of resource. And as we always say, that there's an adage in Broken Hill that the Broken Hill ore body's had an 8-year mine life since 1885. And that's never a truer word spoken yet, because when Charles Ross found the ore body in the late 1800s, it obviously wasn't a 300 million tonne resource then. It was literally a rocky outcrop there. So over that 140 years, you've seen consistent ore body discovery and growth. And that's what we're continuing to see. Like a lot of these super giant ore bodies, you keep drilling them, you keep giving them the love, and they return it to you there as well. So we're seeing multiple opportunities for extensions on the Ras mining lease, which you can sort of see. You get it in the middle of that picture on the right-hand side. You can see the Ras mining lease, and obviously a growing story out at Pinnacles as well. But just touching briefly on the Ras mining lease, there are effectively four production centres growing at Rasp. Now, the Western Min, which is this area in brown, has really been the main ore body or the only ore body that's been mined for the last 15 years on this mining lease. As we said, it's nice bulk ore body, relatively low grade compared to the main lode, but a nice easy ore body to mine as well, and still has extensions, really nice extensions. We're seeing that grow. In fact, where it's sort of shaped like a boomerang, much like the main lode ore body is well defined as, but half the boomerang hasn't been discovered or put into JORC. But we're drilling multiple 100 meters away from the mining face and hitting the same sort of ore as well. The other opportunity, slightly further underground, is Centenary, which again is not even shaped like half a boomerang yet. It's more almost a sultana in terms of its JORC size. But again, we're seeing huge application there for that ore body to expand, and will become another great bulk ore feed for the plant. Very similar, maybe slightly higher grade than Western Min, but a similar style operation that will be, one of the backbones and pillars of this Ras mine for generations to come. The two kind of additional centres that are quite exciting is one is the main lode ore body, which obviously we have back online. Really high grade, 2.5 times the grade of that Western Min ore body. We are seeing massive applications for expansion of that, and I'll show you a slide on that shortly. But drilling is continuing to come up trumps there of high grade feed that will ultimately extend that. The JORC that we have over the main lode ore body is tiny at the moment. It's about 900,000 tonnes, but that is the JORC certified mineral resource. No one has drilled the main lode at the Ras mining lease since about the mid 1970s. So great application to actually take known lenses. You can literally walk up some of the old adits and touch and feel these lenses, and you can and we'll grow that ore body over time. And again, you're feeding multiple ore sources into a 750,000 tonne per annum plant. We don't see the main lode feed being more than probably 250,000 tonnes really at best, based on the current plant size that we have. And so, yeah, you don't need a huge ore body, but to feed into the plant, but it's a beautiful high-grade spice blend as well. The fourth production centre that we see evolving over the medium term is actually around surface stockpiles. So Broken Hill, throughout its history, has really made a name for itself in reprocessing old ores. Late 1800s mining started. They've been reprocessing ore bodies throughout the 1900s there as well. So as prices increased, as technology has improved, ores have been reprocessed there, and we fully expect to do the same thing. The BH team really has a backbone in metallurgical processing, and so we really enjoy the concept and the challenge of looking at tailings reprocessing, looking at surface slags and slime stockpiles, and you see that story grow over the coming 12 to 24 months about us putting resources over those surface-based materials, and then working to commercialise them in whatever way, shape, or form as well. But again, it becomes more feed and more mine life in there. Now, switching over to our sort of strategic commercial agreement that we have around Pinnacles. This is really maybe the linchpin in the whole strategy. Is the Ras mining lease is wonderful. We have a beautiful amount of sunk capital. This 750,000 tonne per annum plant. It would cost you $300 to $400 million today to build that if it was a greenfield site. Today we have 55 kilometres of development underground at the Ras mine. That's all sunk capital. That's all usable sunk capital that gives us access to ore bodies that we can bring up. The Pinnacles mine and the strategy around marrying the Ras mine and the Pinnacles mine together really creates this generational asset opportunity for us. So Pinnacles, which I'll take you through in a few slides' time, is exploding before our eyes. It's becoming a huge ore body and just a wonderful opportunity for shallow, high-grade feed to be fed into our existing plant and expansion opportunities around that there. So we now own, I guess, all of the near-term exploration upside and feed along the Broken Hill ore body. So this 28-kilometre long stretch of ore, which if you can see my laser pointer here, sort of starts down at the Pinnacles mine, comes up through the centre of town, and it's sort of like a giant sine wave, so to speak. And it goes about 8 kilometres north there. So we own two of the three operating companies in Broken Hill, the third one being Perilia, who are doing a great job turning around their asset base as well. But we see us as having all the prospective future feed and a great opportunity for potential full consolidation of Broken Hill in the future as well. So yeah, really looking to continue to expand our base in Broken Hill. You might have seen we released an announcement during the quarter about various joint venture agreements with Kingfisher. KFM is their ASX code. They have some tenements to the southeast and to the northeast. Great opportunity for us in the future, maybe 5 years' time plus, depending on what they discover and develop. Great opportunity for another feed source straight into our plant there as well. Certainly not relying on it, but we see it as probably some of the most prospective ground in the region. And as such, we have a minority interest in those tenements of Kingfishers, but also we see it as a future potential feed source as well. So the BHM team will absolutely stick to its knitting on growing the asset bases at Rasp and Pinnacles, but we know there's going to be additional third-party feed sources. And we've certainly put the flag up and said, if you have a third-party feed source in the region, we want it. We want to get a hold of it because we want to grow our feed base and allow us to do things like expand the plant and that sort of stuff as well. So we're having those active discussions in the region as well. It should be a continued consolidation process going on. Just a quick deep dive on Rasp itself. As I said, we've got this Western Min ore body. This is a plan view where Western Min Centenary sits below that. It is possible that they actually link up and be the one ore body. There's a bit to discover there and learn. And that's the ore body that has really been the backbone and the engine room running the operations for the last 15 years. As a private business throughout 2023 and 2024, we invested heavily in what looks quite small, but this little red zone here, this is about 1,100 metres of development to bring on the Blackwoods ore body of main lode. So we're starting here and we're heading north, which is really important. So as we head north along main lode, we're discovering more and more ore, but the grades also increase, which is well known in Broken Hill that the grades, particularly of silver, materially increase as you head north here as well. And you can see this is a snapshot of some of the drilling that we've done to date. Just beautiful high-grade feed. You know, you compare these silver grades in this drilling versus our average silver grades for the last few quarters. Our last few quarters don't hold a candle to it. So we fully expect to be continuing to materially increase our silver grade going into the plant, albeit it will be mixed, obviously, with Western Min, main lode, and eventually Pinnacles, but the grades are going to continue to get higher into this sort of 100 gram plus a ton material there, which we know we can see what's happening there in terms of overall production. And you can see here from this picture below some really good examples of resource upside here. So in these zones where there isn't any JORC and certainly not supposed to be any ore, for example, we hit 37 metres at 314 grams a tonne of silver equivalent. Outrageous, absolutely outrageously good quality ore. And it's only about 300 metres deep. We've got existing declines down to it. We've done that investment. As I said, we have 5 levels there in the southern end of Blackwoods. And now we're going to slowly head north as we extract this high-grade feed and get the benefits of it. I'll quickly go through some of the other features of BHM as a company. As I said, we inherited a vast amount of sunk capital. Again, it wasn't seen as being, I guess, valuable sunk capital by Toho because they weren't looking to invest and bring on more ore feed. We sort of flipped that script by acquiring it and then working to find more ore sources, whether it be via exploration and investing the capital or via M&A activity with Pinnacles as well. Flips that and becomes incredibly valuable sunk capital there as well. So we have a relatively brand new portal and decline. As I said, our plant is only about 12 or 13 years old. It's in fantastic condition. We inherited about 130 employees, all the skill sets and the experience there. That's actually now expanded to about 170 employees. And we have a beautiful tailing storage facility, which has about 13 years of life remaining in it, of capacity remaining in it. And that's at a full 750,000 tonne per annum run rate. So really good set of infrastructure that we have, and we're feeding those operations into it. out at Pinnacles, I said this really sort of starting to become the story of Broken Hill is bringing this third ore body online, and we're really excited to be able to bring this online in the June quarter, albeit small, slowly, and just starting to ramp it up a bit like the process that we are still going through with main load. It will be a measured ramp up into the plant, making sure we have all the systems in place to do this safely, but to do it consistently as well. So lots of drilling's been going on out here. For those that don't know, the Pinnacles mine has been owned and operated by one single private Australian family since 1954. So it's a beautiful, well-developed mine that no one really knows anything about. And the Williams family have done an amazing job. They've built a 50-metre deep open pit. You can see here this shaft in the background, the console shaft, 75 metres, 3 levels down to about 75 metres. They even have their own processing plant, absolutely tiny. It's about a 30,000 tonne per annum processing plant. All of this is on care and maintenance since COVID. Now, what's amazing here is all of this was hand built. There was no outside influence whatsoever. And we approached the Williams family several years ago with this concept of consolidating Broken Hill and bringing the RAS mine and the Pinnacles mine together. And we were able to forge a wonderful business partnership with the Williams family. And that's culminated into a 70-30 operational profit share. So BHM 70%, Pinnacles 30%. And now we are charged with the task of bringing the Pinnacles mine back online, initially via restarting the open pit operations. And to give you some perspective, these operations were stopped in COVID, not because they ran out of ore. The ore body continues to plunge down, but the difficulties of COVID, as we all recall, just made it almost impossible for a small family operation to continue in any meaningful manner. So we know, for example, there's about 40 or 50,000 tonnes of ore literally in the base of the pit with no cutbacks. We can just start mining that, and that's kind of the initial focus of the business is to restart the Pinnacles operations utilising that ore in the base of the pit, and then we'll expand that over time. And what's amazing about this story is just how big the ore body is that's unfolding here. So about a decade ago, the Williams family cracked the geological nut of Pinnacles, so to speak. The ore body has exploded below them with drilling, and they realised they've really just been mining the tip of the iceberg on this ore body over that last sort of 75-year period there. We were fortunate enough to inherit 55,000 metres of drilling on this site. Now, not a single metre of that had ever been publicly released. We've obviously inherited all that knowledge, all that sunk capital, and now we've applied our own drilling to that. So we've completed, or we announced a phase 2 drilling campaign at the Pinnacles mine over 2026, about 25,000 metres. We are well advanced on that through to today. We're nearly halfway through that drilling campaign as well. So again, probably some of the drilling capital that we've been expending over the last couple of quarters will actually start to tail off. Simply, we don't need to spend that much more. We have about 9.5 kilometres of core. We haven't even assayed yet, so the backlog in the core facility is real. One of the reasons we front-ended, or the main reason we front-ended drilling this year around the Pinnacles ore body is because we want to get it into the MRE. So the end of this year, we're going to come out with hopefully big mineral resource upgrades at Pinnacles and at RASP. And obviously you need to cut off, pretty soon in terms of your drilling, get it all processed and then get that into the MRE. So we have a 16 million tonne mineral resource base at the moment across Pinnacles and RASP, and we fully expect that to grow. We've drilled heavily. By the end of this year, we will have added about 40,000 metres on Pinnacles alone on what was 55,000 metres over the last 75 years to date. So the knowledge of the ore body is expanding significantly, and we're growing it. And you can see, for example, we actually inherited 3,000 metres of core when we did the deal with the Williams family a couple of years ago that hadn't even been assayed. And that was one of the first things we did, is we got that core assayed just to give us a sort of snapshot of what we were dealing with. And it's just a wonderful, wonderful ore body that's growing here. You can see these results, they weren't never been publicly released until September last year. Shallow ore, all sort of sub 50 metres. You can see in these super high grade on silver alone, but big, thick intercepts of zinc equivalent or silver equivalent, whatever your flavour is there. So a silver lead zinc dominant ore body with this overprint, this really interesting overprint of gold and copper, which to be honest, we don't fully understand yet because it extends outside of the known sort of lenses or seams of the silver lead zinc rich lenses of the ore body there. So really quite a lot to unpack there, but we are hitting, between half and 3 or 4 grams of gold over many meters in and outside of the lenses, the silver lead zinc lenses there as well. So the pinnacles will continue to evolve. We've talked about the drilling that we're doing in the open pit area, and that's obviously so we can properly define how big this open pit's going to be and start that process as quickly as possible. During the quarter, we also announced a fantastic discovery around an area of the Perseverance deposit there. So one of the lenses is called Perseverance, plunges steeply, but it is super high grade and is completely untouched. So starts at about 190 meters deep. At the moment, we're seeing this 350-meter deep down dip section that's still open that runs up to 100 meters wide and 2 to 10 meters thick. Now, based on the drilling we've got in that, there seems to be consistent grades above 500 grams a ton silver equivalent. Absolutely fantastic high grade, one of the highest grade systems really in Australia right now that is still open. So as we flag to the market, we see a great opportunity that, yes, we will get our open pit up and running. We'll do that this quarter and slowly ramp that up. And you can sort of see the red outline there of what that pit's going to look like. But very quickly, we're going to start looking at an exploration decline and putting that portal in, getting the exploration decline down to this high grade zone, this sort of honeypot zone that we have in the Perseverance ore body. And we know that whatever capital we have to spend on that decline, we're going to make fivefold plus on that just because we're going to be mining straight through this really high grade material. We can then have drill drives off that, and we can be drilling back up into the ore body and laterally into the ore body as well to continue to grow it, but do that at a depth of 250 to 300 meters rather than having to drill from surface there. So that's a great opportunity to really put the foot down and expand the ore body, really probably for 2027, 2028 MRE upgrades as well. We'll be continually upgrading this ore body over the journey there. We are hitting ore hundreds of meters away from the existing JORC resource base. So we know that is going to grow. It's just a matter of time, committing the capital to drilling, but ultimately getting it back up and running as well. It's not a new discovery. It's not a deposit which we're just going to drill forever and a day and keep releasing high grade drill results to wait to be taken out by a neighbor or something like that. We literally have high grade ore that is shallow, open pittable, thick intercepts on mining leases, and it's 15 kilometers away from a plant that we own that is hungry for feed. That is just a perfect scenario for us to get this thing up and running as we're growing it as well. So that's exactly what we plan to do. So I'll just pause there. Thank you very much for listening. I appreciate we've gone a bit over time there. I certainly really appreciate everyone's attention on it. I did have one question. I'm just looking up the info email there. Please email in any questions that you have now or later on, and I'll do my best to answer them there. One question come through from Mike Collins, actually. Thanks, Mike, for sending it through. Is BHM making any progress in the possibility of reprocessing the tailings from the TSF to extract more metal contained in it? Excellent question, Mike. Obviously, talked a bit about those surface-based future production centres that we have at the RAS mine itself. And the short answer is it's obvious. Absolutely, we're looking to extract that value there. So one of the original TSFs, you can see it here on this picture. This is called TSF1. So this material is decades old material that has been deposited down over the journey there. Still carries significant grade. We haven't released any JORC resource or any drilling data on that, but we have drilled it out. There are public reports available that suggest there's about 5 million tonnes there at 5% zinc and lead and 30 to 50 grams a tonne of silver. So really nice feed opportunity there. If we can figure out the metallurgical processing and get that through the plant, just a wonderful ore feed that ultimately is going to grow your resource base and provide more metal. And you're talking about an ore body that's at surface, it's already mined, crushed and ground, and we literally pick it up and it's 100, it's probably 80 meters away from the ROM stockpile there. So there's basically no mining costs relative to the underground mining. Might be slightly lower grade, but a wonderful opportunity to monetize that. And we continue to do that. We've obviously been very focused and busy developing main lode. A lot of focus this quarter on Pinnacles coming online. But as we come up for air, as we get a bit of breathing space, we can look at all these other opportunities there. We're really just 9 months into what we see as a very, very long journey of discovery and growth here and consolidation at Broken Hill as well. So thank you very much for listening in. Really appreciate it, and look forward to sharing the June quarterly report with you again, which will be another step up the step ladder of growth here. Thank you. Cheers.